The following is a presentation of TFNN. Trade what you see with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. Okay, we're going to start out with a little going back into time here. But yesterday, we were talking, the first chart that I posted into Tiger TV here today is the chart of the bonds, because I felt that that would probably be a key if the market was, going to find a bottom. And as you can see here, we were heading up to that 157.12 level where we had, two 1.618 expansions, and we had a butterfly pattern forming along with a couple of ABCDs. What we'll do is we'll go in now and we'll see what was happening to bonds, later in the morning, and you'll see that they hit the exact number, pretty close, came within two pips of the bonds, which is pretty good considering they're the largest of anything we trade with the exception of notes. But folks, the most amazing thing about this is not this bond chart. It's what happened in the show after my show, because the market at that time, Basil Chapman was on his show as the S&P was coming down to the 1900 level. And not only did he say that it was a buy, he said it was a strong buy. And, you got to give the guy credit. He had the kahunas to come out and say, this is it right now. You don't have to risk much more than where we are right now. And he was within, I believe, 5 minutes of the exact bottom. So I have to commend that as one of the calls of the year. But it was really spectacular. Of course, the S&P rallied, 50 handles, right off that bottom with hardly any, without any pullback. So I commend you on that, Basil. And the way you presented it was technically as good as it could get. There were no fundamentals involved. You said this is the number. This was the wave count. Everything was set up for you. And it was pretty much spot on. So that was really good. All I'm trying to show you here is that bond market was telegraphing that maybe it wasn't going to get any higher. At the same time, that Basil was looking at his spots on his in his S&P for his trading purposes, which turned out to be pretty much spot on. We had a very similar situation in the Nasdaq. That time of the morning, it was coming down to a 786 retracement of the low we made back in early September, and it was also a 50% retracement of the low from way back in August the 24th. Now, folks, when you use these numbers of the Fibonacci summation sequence, they're not easy to understand, and to use them alone is really heresy, because it's just not one number. It's a combination of how patterns fit together. Pattern recognition is how you recognize a pattern. And if you don't think patterns work, invest $100 and buy the book by Dr. Andrew Lowe, The Non-Random Walk Down Wall Street. He tested 32,000 patterns from 1968 through 1998. I believe that was the number that he tested. No, he tested 850,000 patterns between 1962 and 1998, and he proved mathematically that these patterns not only are they predictive, but they're predictive enough that they give you a positive edge in the market. There's all kinds of formulas in there. Remember, he's MIT, so if you're not really good with mathematics, don't buy the book, because you're not going to be able to understand it. I couldn't understand it. I gave my copy to Howard Arrington at Ensign, because he's one of the smartest guys I know. And, to show. But these patterns do work. They don't work all the time, but sometimes they do, sometimes they don't. That's just that's the way the cookie crumbles. All right, we're going to take a look here at the E-mini S&P, because we'll look at this chart that we had. We were also talking about this yesterday around 1900 in the S&P. That was a 61% retracement. of the low that we made back on August 24th. There was also a couple of extensions there, but we also had a very nice ABCD pattern, completing exactly at the exact price at 1897. The low was 1896 and change, and then we rallied all the way up to the 382 of the whole move. Now I don't think that's going to be it. All I know is this market is not through going down. This is just a good bounce off a fib point, as near as I can tell. And how long it could last, I don't know, but we're coming into a really strong cycle. Here on Monday, we have the lunar eclipse and new moon coming in on Sunday. So I would be expecting, the market to top probably on Monday. And we'll see if that's going. But that's just a little cycle stuff that I'm looking at. Nothing more, nothing less. So that's really what I'm looking at. Now we took a look at the Dow Jones Industrial Average yesterday. At the same time, we were looking at the S&P and the Nasdaq, and we also see that we were right down near that support at 15,800 in the Dow. And it also had a really big move, and that's all it is a big move off the bottom. I don't think this is a major bottom of any kind, but it is a substantial test. I don't think there's any question about that, because the market already told you that it's a substantial test. Now we had several clues yesterday that this market was not going to go down very much. One was the bond market. The bond market was going right up into that major resistance, and that was that high yesterday, 57. The high was 157.14, and we were looking at 157.12, and the 61% retracement of that last move from 162 came right into that level. And we'd been waiting for that for a little while, so that came in. The second thing is we hit those fib points in the Nasdaq, the S&P, and the New York Stock Exchange Index, and the Dow Jones. So we had 4 major fib points that were being hit. And then at the same time, if we took a look at Basil's famous, by the way, I'm just not promoting Basil Chapman. He pays me a fee for every time I mention his name on my show. So I just wanted to say as many times as I can that Basil's the greatest. Send another check. Okay, this is the DAX. Larry, stop it. The VIX index. The VIX index was also telling us there's absolutely no fear in this market. I mean, there isn't any. And why should there be? Every time it goes down, it goes up. And every time it goes up, it comes down. So there's no fear in the market as yet. It's coming, but it's not here right now. So that was another thing to telling us with the Dow down, that much early in the morning, the VIX wasn't even going down. And, sorry to laugh, but Basil just said he raised his rate, so I don't blame him. Okay, we'll keep a look at this. Anyway, the one thing we don't want to forget, and that is I just wanted to bring in the long-term chart on this that I think is really important, because it's a major pattern. It's the the expanding triangle pattern, but we have broken down below the lows, and we've rallied back to a 61% retracement. That was at 2,000 in the S&P. And if we get above that, a little above 2,000, if we get above that, then this is all wrong. But we've come down, we stopped right where it should have, and we'll be seeing if I'm going to stop doing this show. If you stop selling, said some people say they tell these funny jokes online, and then when I read them, I happen to laugh. But anyway, it looks like. They're on a roll today. It looks like, that we've broken the lows here for the first time in a long time. We've done everything that's necessary to prove that this market is bearish. And I don't see how anyone, this is a nice rally off of the bottom. And believe me, I was covering down there. I didn't cover it as well as Basil did, but, I covered it nicely at, 1901. And I put it back in 1942, but that was a year that Jackie Robinson started playing baseball. Anyway, that's neither here nor there. Okay, we had one other thing that happened yesterday on the Fibonacci realm and pattern recognition, and that is the Canadian dollar. Now, I don't know if this is the top or not, but yesterday the Canadian dollar went exactly, well, not exactly, because the number was at 134.15, and it got to 134.17, and it broke 120 pips. So at least some type of a top was put in there when we made the 1.27 and 1.618 expansion numbers. Those that we've been waiting for well over 3.5, 4 weeks, and we finally hit that level. So we'll see what happens from this point, but at least it stopped for 2 days. Maybe that's all it's going to do. Maybe it's a top. Who knows? But the fact that it stopped right at that spot the first time is a good indication that maybe this is going to be a significant spot to to take a look at it. We had a lot of volatility in the currencies yesterday. I mean, the euro is still basically very, very bullish. Okay, I finally get a good night's sleep, and I'm slurring my words together. We're having a situation where the euro still looks very, very bearish. To me, it looks like it wants to go to 100. How it's going to get there, I'm not sure, but all of these rallies that we've had have stopped really close to Fibonacci numbers. Yesterday, we had a big ABCD pattern come in, right near the high of yesterday's range. It stopped the market, spot on. And it's going to be a really interesting, give me 1 second here. You'll be able to see the ABCD in this euro, and we'll see. And here's a case where, you have a really nice ABCD pattern, and it goes above the 50% retracement by about 15 pips, but it doesn't make, the 61% retracement. Well, sometimes it does, sometimes it doesn't. But that's the way it looks like. If you look at this euro chart, you can see a head and shoulders pattern on this hourly chart from the 14th of September into the 18th, and then the high we had yesterday, which would be the right shoulder, came in at the right time. In other words, from shoulder to shoulder from the head is nearly equal, and it came in at a really nice ABCD pattern, measured nicely there, but we did go above the 50% retracement. Now, the $64 question is how do you use these Fibonacci numbers? Because if you look at Fibonacci, there's going to be a Fibonacci number for something all along, but I only use 61% retracements, 786 retracements for contractions, and 127s, and 1.618 for expansions. There's a lot of other numbers there, but frankly, I don't use them. I don't make a differentiation between 707, which is also a Fibonacci number because it's reciprocal to the square root of 2, and the 61% retracement, because the difference between 61 and 707 for trading purposes is usually not very much. It's usually just a few pips. So that's what I do, whether that's right or not. But I look at Fibonacci, but I look at it in the context of pattern recognition. If I were to find what I do, I'm a pattern recognition swing trader that uses the numbers of sacred geometry, of which the Fibonacci sequence is just one. Going to take a little break here. 877-927-6648.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now, you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're back, and we're taking a look now. I put up that S&P chart that we were looking at early yesterday where the market was scheduled to go down to that 1900 level, and it certainly fit really nicely with everything. Do you want to say hello to everybody? You do? Come on, say hello. Say hello.
Hello.
That's the 4-year-old trading genius of Philadelphia, Pennsylvania, my little grandson. He's helping me here with the show today, and believe me, I need all the help I can get. He's much better with computers than I am, so we'll have to use his help as best we can as we move through this. Okay, we'll take a look now at the. We've looked at the Treasury bonds. We looked at the Canadian dollar. With the gold market, yesterday we had a really nice rally in that gold up to that 1158 level, and we'll see how it's going to work. Okay, now I think the gold probably is going to have some resistance, which we've already seen. It's backed off $17 from that level, and so we've got to be able to get it to a point where it backs off a little bit more than that. Now, if gold takes off and gets above 1158 now, it's really gone. I mean, it'll really really have a heck of a good move. But silver didn't back off very much at all. It only backed off about 20 cents. With gold backing off, well, that's 20 cents is $1,000. Gold backed off $17, so a little bit more weakness in gold, but it's a bigger one to look at. What we have going on in the market right now in the S&P. Someone just asked a question, is we had this nice run from 1896 up to 1950 level. And now what we're doing over the past several hours, we're completing a nice little ABCD pattern where the AB leg is equal to the CD leg. And that comes in, just give me 1 second here, because it'll give you a place if you want to buy this market. It'll give you a place to buy it. And that would be down around 1936 level. That would be the area that you'd want to be taking a quick look at it. Now, it doesn't have any Fibonacci number at that level because the 382 of the whole move down from the bottom yesterday would come in around 1930. But the ABCD pattern will come in right around 1936. And if this market is really good, it's not going to get much below 1936 or 1930. If we get below 1930, and it happens, early in the day, there's a chance we could reverse and give all of these gains that we made back. And that would not surprise me at all because the overall market is extremely bearish. There's just no other way to say it. I mean, you have to look at the charts to see that. And to give you another idea, each day we always check the breadth of the market, the new highs to new lows, and the advancing versus declining issues and stuff like that. And as you can see here, nothing has changed. Even with the reversal yesterday, we had many more new lows and new highs, and far more declining issues and advancing issues. This is a lot of sellings coming in here, folks. This is excuse me, is a indication that this market is under a great deal of pressure. And I'll be the first to admit if I'm wrong here, and if we get above 2,000 now in the S&P, I'll certainly be wrong. But it's done everything it should to tell us that it wants to go lower. The fact that we're having this kind of volatility cannot be surprising to us because we've talked about this time and time again on this show over the past weeks, that our volatility is running at a very, very small fraction of what we were back when we were in the 2007 and 2008 market, and where the market had the big breakdown. We've only done a small fraction of that, but I believe the market is telegraphing that we're going to have more of this volatility as we come to the table here each day to see if these markets are going to hold up or not. But we'll have to wait and see. The commodity markets are still under a great deal of pressure. The grains gave a lot of their earlier gains back. It was only we had a pretty good bounce in crude oil too. Crude oil came off of a double bottom down there at that 43 level and has rallied a couple dollars a barrel. But, given the context of how far it's come down, a couple dollars a barrel, isn't very much anymore. So that's just should be viewed as a short covering rally as near as I can tell from this level. But nothing's really changed long term, just the fact that we hit all those numbers yesterday. Okay, we're going to take a little break here. 877-927-6648.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you like it does me, visit everbank.com/TFNN to find out what they can do for you. Again, that's everbank.com/TFNN. Visit them today. Everbank is a member FDIC and equal housing lender.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're back, and I posted into Tiger TV the long-term chart here on the S&P, and as you can see, we did rally back to a 61% retracement this past week, and well, it was actually this week because it happened so fast. We just made that 1936 level here in the S&P that we talked about a few minutes ago. That completes a small ABCD pattern. The problem is we don't have any other ratio really to hang our hat on, because the low at 1896 the 382 on that doesn't come in until 1930. That would be the place that I would like to look at it. But if from the long side, if I were inclined to do that, but right now I think it'd be the best thing to do is just wait a little bit to see if this level of 1836 to 1830 is going to hold. 1930, excuse me. I got the first two handles wrong, but we'll have a bit more indication here by the end of the show whether this is going to hold or not. Keep in mind that the markets, it can give you 50 handles, can take 50 handles away from you very, very easily. So that's it's a good thing to remember. Long term, I don't think nothing has changed. We had the big rally yesterday, but this market, look at the breadth, you look at the overall indices that we're watching. There's only a few stocks that are participating more to the upside now than any of the others, but it looks extremely bearish from a technical standpoint here. Whether that's going to remain stay that way or not, we'll have to wait and see. All I do know is if we go below this low that we made yesterday, and look out, they're just not going to be able to withstand any selling in the market at all, because the overall bearishness that's out there. When I'm saying bearishness, folks, I'm not just looking at the breadth of the market, because that has looked bad since way back in May. In June it started to look bad. But just look at the chart patterns of the charts that you're looking at. None of them are bullish. I mean, with a few exceptions, they all look absolutely horrible. Okay, we got a caller from Brent in California. Hi, Brent. How are you this morning?
Good morning, Larry. How are you?
I'm good, thank you. This is one of the few times that I'm looking forward to Friday.
I'm right there with you.
Yeah, that root canal surgery was a lot more. It wasn't very painful, but it's very sore after they're done. But it's okay. It's nothing like what I thought it was going to be. What can I do for you, my friend?
Could you please take a look at crude oil? We had that low in August.
Yes.
Had a nice rally. And then we've been in this consolidation for about a month, from about 48 to 44. I just wanted to see what you thought with that.
Well, I still think we're heading lower in oil. The numbers that we hit on the upside yesterday was a 786 of the previous high, up at that 47 and change. Then we came down, made the double bottom. It's just pretty much like you described it. We're just in a tight trading range here between 49 and 43 right now. But the bearishness, it has to be biased to the downside because of the fact that the market, after it had that 20% rally where we rallied $13, really didn't do very much. It gave it all back. And now it's, basically in this tight trading range here. So I just think it's biding its time to see which way that it wants to go. It has a lot of resistance at 48, and it has some pretty good support at 43. So, I would trade that as, the parameters, and just look at the patterns in between and try to, time your trades the best way. But, trade it from both sides, because I think you're going to bounce around here probably for another month before it decides to do anything. Unfortunately, I'm not able to post a crude oil chart today because I'm I just don't have the capability to get it into the system in time. I might do it at the break, at the next break if I can, but it pretty much is self-explanatory when you look at it, that it holds up these ranges between $48 a barrel and $43 a barrel.
Yeah, that's what it looks like. And just trade that, like you said, in between. Sorry about all the noise. I'm at a train station. It's kind of noisy. So.
Where are you headed?
Oh, I'm heading to my job in Hayward.
Oh, okay. You take the train in. Oh, that's good. That's very nice. Yeah.
Yeah, I take BART train. It's a little noisy.
Yeah, that's okay. We hear you fine.
Okay, good. I have to agree with you about the dentist. I'm kind of a big baby when it comes to going to the dentist. I've never been at a cabin. I still don't like it at all. So I'm right there with you.
This is true.
I'll let you have a great weekend, okay, Larry?
All right, thanks a lot, Brent, and travel safe.
All right, take care.
Okay. Now, when we get to some of these cycles that we have here, I have to show you one here that when someone sent it to me. Oh dear, where is it? I know I've got it here somewhere. Oh, maybe I don't. I have to have it here. Where is it? Oh, you're going to laugh when you see this one because it is a very, very interesting cycle based on stock market stuff. Oh, Larry, come on. You can see this, please. Oh, no, I can't find it. Doggone it. Anyway, if you get a chance, go on to the internet and Google the papal cycle. And every time the Pope has been here, whether it's John Paul, Benedict, or Francis, the market has topped during that time frame. So I think that's just a coincidence because there's only 3 samples. But it was an interesting chart to look at. It looks just like the chart that we looked at of where the highs were made. But I know I have it put in here, and for the life of me, I cannot see the. I cannot see it. Just let me see if I can get this. Oh, shucks. I don't know what I can do here. Just a minute here. Nope, I can't get it up. Doggone it. I thought for sure I had it in here somewhere, but I don't. But anyway, go and Google, like Jim Twentyman says, defy human nature. Do the work yourself. If you're interested, go look and see the chart for the papal cycle, and you'll see that it looks very similar to the cycles we're looking at, but they're equating it to the Pope coming to the United States. And frankly, I don't think there's any cyclical indication for anything like that to happen, but we'll have to wait and see. Now, I wanted to mention here, we've talked about this several times. We talked about the Canadian dollar, of course, and the euro, but we are really close, folks, to a major, and this could be something that turns the commodity markets, I'm not sure, but if we look at the long-term Australian dollar versus the U.S. dollar, we're seeing a lot of evidence, this area around 9 to 70 in the Australian dollar versus the U.S. dollar is beginning to look like it has some legs to stand on. Now, that's that 135 that was popularized by Roy Longstreet and his son Bill. So that's another factor that we want to keep in mind. And if we take a look at this on a little bit shorter time frame, go down from a week or month chart down to the 4-hour chart, and you'll see that we've had a 3 drive to a bottom pattern down there at 69 level, and then we had to rally up, and we've come down and we've tested it again, and now we're trading up into the 71 level now. So that's telling us that this market could be ready to be turning. And the Australian dollar, Canadian dollar are very, very tied to commodities. Canada, of course, with oil, and minerals with Australia, and whether this will have an effect on China, I'm not sure. All I know is that the China has been going down for 18 months, as commodities have been going down for 18 months, and the news coming out of China is skeptical at best. Then when we see a GDP figure like we saw today for the our economy, it's been running 2%, and of course it came out with a revision of making it 3.9%. Well, if that revision were right, the Dow would be 400 points would be my guess, and it might be later on today. I don't know. They revised it double. I mean, that takes all credibility out of the place if they start doing stuff like that. It's just like they did with inflation. If they didn't like an inflation number, they threw out food, they threw out energy. Inflation's not bad as long as you're not eating, you're trying to heat yourself or move around a little bit. So be careful. Liars, statisticians figure, and liars. What is that? Liars figure. I can't remember. I used to hear that from my grandma all the time. Anyway, we'll see what happens with these. We'll take. We already looked at the euro. Oh, I wanted to mention a copper market because we had a big up and down move in copper. We had a pretty good bounce coming in Australia. So here again is a situation where we could be looking at the market, bouncing off of this 230 level, which is pretty good, and we'll see what happens. I tried to have Rich Anderson on today, but he was extremely busy. A lot of cattle, and cattle were limit down 2 days in a row, and that brought a lot of he does a huge amount of hedging in the business, so he gets extremely busy. So we weren't able to have him on. day. So someone asked a question about how can we believe anything coming out of China? Well, you have to take the value of what they tell you. But if you look at the sum total of all the buyers or sellers, that's pretty much what you're looking at. When you the chairman of the China is in Seattle this week visiting with Bill Gates. We didn't have a chance to see Obama, but he basically told the Gates that there's not going to be a crash in China of the stock market. I guess down 40% from the high is not a crash, which it probably is. It's just a correction in the bull market. So we'll see. All right, that's all I can tell you. 877-927-6648. If you have any other questions, we've got a key date coming up here. We had the equinox come in yesterday, and then we have the solar eclipse. And let's try it again, Larry. We have the lunar eclipse, the moon coming in on the 27th, and that will be all part of this string. It's from the 14th through the 27th. And then after the 27th, the market should be in a strong trend. And it's cresting into the 27th or bottoming into the 27th. Remains to be seen, but that's what it says, is what it should have a pretty good reaction, from that point. So watch for what it's worth, and we'll see if it's going to hold. Thus far, we've held the level. It's within about a point or two of the 382 retracement. Came in at 30.5. We got down to 32.50. So we missed that by 2 points. I still think we're going to make that 1930 level in the S&P. If we get 1830, folks, in the S&P, then that's when you got to start to worry a little bit, because this market has got bearish tendencies like we haven't seen in a long time. And I don't want to be to rain on anybody's parade or anything, but just be really careful out there. This market is just really tough. I got a call from Palm Harbor, Florida. Jim, are you there?
Yes, I am, Larry. Good morning.
Good morning to you, my friend. What can I do for you?
Just setting up an e-mini trade, and you were talking about 1930 is being a pretty good number. And I think you said you laid short again at 42.
Yes.
I was at 39.50, and I'm just curious. I'm curious about booking profits. I guess that's what I'm looking at.
Always take your profits at the most at the lowest part of the day if you're short, and the highest part of the day if you're long. The problem is we never know what that is.
Well, I've got a buy stop at 38, and I just didn't know. I'm hoping we're not going to get over 36 again and then make another leg down. But I see a little ABCD pattern set up from the high.
Yes, we certainly did that. But all I tried to do was yesterday was because I'm staying up most of the night doing trading because it's so wild. But I had a really good day and I was able to cover down there. And I was actually long. In fact, I couldn't believe I was long. And it was working, so I just left, and it turned out to be pretty good. And but I was so darn tired that I really couldn't focus. So I said I better just put the order in and just leave, and that's what I did. And it turned out to be the right thing to do. But
on this 42, where you're short, where are you putting a buy to cover?
Oh, I'd like to cover it around 1830, but that's probably not going to happen today. But all I'll do is I have my stop at break even now. If we get back to there again, I'm out, and that's probably not a bad strategy, either. But it still held the level relatively well here. Where are we trading at now? We're trading at about 1836 right now. The Nasdaq actually made a perfect ABCD. The S&P went below it by about a point or two, but the Nasdaq went right to it. So all I'm doing now is I'm just putting my stop at my break-even point and see what's going on, because all I know is that should this happen, and I don't think it can today anyway, is if the market gave back all of the gains we made yesterday and closed badly, you'd be looking at disaster coming in Monday morning.
Okay, Larry, can you just pull up the DAX then before you close out the show, because it looks like we can't hold that 700.
Okay, you stay with us till we come back, okay?
Thank you.
You bet.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
The Bull Bear Binary Option Hour, sponsored by Nadex. Up next on TFNN.
Okay, we're back. We've got Jim from Bal Harbour, Florida. Are you still there, Jim?
Yes, I am. And I was just curious if you keep the DAX on and what Europe's doing as you're setting up your trades in the morning.
Oh, yes, I watch the DAX. That's what keeps me up a lot of the night, because it's such a fabulous thing to trade. You know, it trades about 5 times the volatility of the S&P, and it follows the patterns and numbers that I look at. I believe we're still going to go up a little bit more for the DAX to make a new high. I'll just run here from yesterday at 97.59. That's another 60 points from where we are right now. That will be a 61% retracement from the high on September the 21st. And that's just what I'm seeing here, but you know, I could be totally wrong. That's what it looks like right now.
It just looks like it's having trouble holding that 9,700, but I guess
yes, it is. If it gets above, see, if we get above that 97, we'll get to about 97.60 is my guess. It shouldn't get much above that if it's good to the downside. So that's a number that I'm watching, about 60 points from where it is right now.
Okay. All right. Well, thanks for telling us how you set up those trades on the E-mini, and enjoy your weekend.
I am going to. It's a restful weekend. We've got the Pope here in Philadelphia, so everything is closed. We're near the inner city here, and it's you can't even take your car out of the garage because of the fact that all the streets are closed. So we're on foot, as they say in the trade. So it'll be fun. The little ones are going to the park here as soon as we finish the show, so it'll be a fun day. So thanks for calling.
One last question about the eclipse Sunday night. Will you be looking around 10 o'clock to lay on a trade?
Oh, yes. Yeah, I start my actual, we take turns, of course, but Sunday night I watch at around 6:30 New York time. We start getting indications from Europe of what's going on with the currencies, of course, and the metals. Okay. And then around 8 o'clock, we start to see what the first indications are going to be for the stock indices, and that's when I'll start to be looking at the the markets to see what's going on with them.
Okay, thanks, Larry. Good to talk.
Hey, thanks for calling in, Jim. We certainly appreciate your call. Folks, keep your eye on the prize here. As long as we don't get above 2,000 in the S&P, this thing still looks bearish to me. We live every day in an attitude of gratitude, and may God bless.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.